Hi everybody, this is TJ with Trend Jumper and Premier Trader University, and as promised, I'm going to do a walkthrough on some other current Forex swing trades. There are so many of them and there's a lot of good ones too. I want to focus on the ones that have, I think, the best learning points. Let's go ahead and we'll start. I'm going to start with the easy ones first. Let's go with the Aussie Swiss. This trade is active. I want to introduce a concept that a lot of you might like. I've started doing this with a lot of pairs. I'm probably going to transition all my trading into this little by little because you have to pay attention to what you're doing. But the standard trade plan says one position gets out at the third target, the second position trails. It's very clear. We treat each add-on differently. But a really great alternative, and one that I really like to do, is to go in with 4 positions. And of course, when I say 4 positions, it might just be one large position or one large enough position where you can come off with 25% at each target and leave the final 25% trailing. But if I just refer to it as 4 positions, it's easier to track because that's how it's being entered into the UTA spreadsheet. So, you know, it's interchangeable. I could say 4 positions or 1 position where you're coming off with 25% at each target level and banking those pips. Okay, so there was a, let's just go back a little bit here, all the way to the left of the chart. This is going back to the 25th of January. And this trade, it triggers in. You can see it's a nice big winner. And I didn't add that up yet, but you can just see that's a good one, right? And if you're taking profits off at each target, you're bringing the register every step of the way down, and then you're trailing also. And look at how the trailer barely exceeded the first target. So if you're taking profit at target 2, you're actually doing better than the trailer. And that's what I like about doing it like this, because even if it only gets to target 1 and then heads back up and stops out for a partial loss on the remainder, or a small profit, you're still able to take advantage of a nice trade that's practically a 1-to-1 risk-reward ratio, and that's always worth it, in my opinion. So just consider this as an alternative to the 2-position approach, okay? And then, of course, you have the add-on here, and that one is going to stop and reverse for a small loss, very small loss, because it's going to get long right here. And that one's going to stab up and hit target 1. It's going to hit target 2, and you could be banking profits at each level. And it just barely misses target 3. If you happen to be watching, I always have my charts running in the morning so I could take a look and see if I have to take any immediate action. You can decide to just mark it out and not fight over a few extra pips, and then this becomes a very profitable trade, and you're still trailing. The add-on, that one's going to stop out, right? It triggers in, comes down, and stops out. Now, you may decide, and I will do this on occasion, especially if it's not that far, you may decide to move that stop and work around your indicators. You got your trigger line down here, you got a little swing level down there. Push it down a little bit, but how far do you want to go? Then there's the trigger line here. You know, you just don't know how far to go. And in this case, maybe I would have just gone from here to here, and it still would have stopped out. I'm all for adjusting around nearby swing levels. Now, if the pink and the yellow line were down here, and you had a much more visible support and resistance level, making a tiny bit bigger adjustment, I think makes sense. All right, and we'll see an example of that in a little while, because you do want to work around your indicators, but you just can't skew your risk reward that much. It's kind of a small trade. I'm just going to consider that one a loss. I know I took a loss on it. Okay, but and then the trailer on this one also stops out for, you know, a pip or 2, not much. Then you get this long trade here. You get 72 pips to the first target, 112 to the second, 153 to the third, and it trails all the way up to here, stops out, and that's only 73 pips. So again, the trailer underperforms the middle target, and it's good to keep track of that. But when you're taking profits at all those levels, you get the best of all worlds. And so then the next trade is this one, and this one was on the 18th of March, and that one took a few days to trigger in, but it never canceled. Stop is down here. I'm adjusting a tiny bit below this little stab down here on the left, but then it stabs up and hits the first target, and I take 88 pips. Meanwhile, I'm moving my stop around the jump line, and based on the last bar to close above, this is today, Good Friday. I'm just going to leave my stop here over the weekend. I got a risk-free trade, and hopefully it'll survive. We'll see. All right, so how does this look on MT4? Let's take a peek. Okay, so here we are with MT4, and it looks a bit different, but it looks pretty darn good. If you look even going back, I want to bring up something right away here. You may have seen this on the Owners Club. But every now and then you're going to see these tiny little bars with these tiny little setups. Those are typically Sunday setup bars. Okay, Sunday setup bars are not part of the trade plan. You need to ignore these bars. On TradeStation, I never saw a Sunday bar. Never occurred to me when I started seeing it on MT4. Took me a little while to figure out why that kept happening, but then I noticed that those bars are occurring on Sunday, and obviously not a lot of range on Sunday. You don't want to take those setups, because what could happen is you could trigger in, stop out, could come up again, can go up and down more than once, and those setups are just too small. Okay, so no Sunday setups. It's not part of the trade plan. And let's see, that's on January 20th. Let's just double check. Yeah, that is a Sunday, looking at the calendar here. Okay, so you can see on MT4 the results probably are even better than on TradeStation. You got this really nice short trade here. You can peel off position size at each target if you want. You got a nice add-on trade, again, all the targets, and trailing all the way down. These two become huge trades. This is over 1,000 pips most likely, if you do the math. Okay, then you get a long trade here, and this one worked out really well too. It never stops out. Okay, you're working down a little bit below. Remember, here's another thing I'm doing. If the stop, this is something you guys might want to consider too. In this case, the stop is at 9478, so I'm going to automatically go to 9474, but then I'm going to add a fractional pip additional. I'm going to go to 94,734 and add another 0.6 of a pip even. And then you can see this one gets down as low as 9480. So you didn't even have to do the adjustment anyway, but I always add a little bit of a cushion because brokers are notorious, and I want to stretch that a little further away and get it out of the reach of the broker as best I can. Okay, even though that's on the sell side, we usually add spread on the buy side. So let's look at the entry for the same type of example of what I'm doing. The entry is at 9526. Now, normally you just add spread and you should be okay, but I'm taking it a step further. I'm adjusting up around the next 5 or 0. So what I'm doing is I'll put my order in at 9531, then I'll add spread, and then I'll add 0.6 of a pip more. Okay, that's how I'm doing it. So my entry, depending on what the spread is on the Aussie Swiss, typically 5 pips. All right, so my entry would be like this. It would be at 9531, and then add the 5 pips of spread, 9536. But I'm going to put my order in at 95366 and add 6 more tenths. That's how I'm doing it. Okay? In this case, it's moot. It gets in no matter what. You have the first target here. You could take profit if you want, or you can just try to go to the third. You have to decide what method you like best. But once it hits that target, now you're going to keep your stop where it is, but you're also going to start trailing the jump line up based on each bar that closes above it. Okay? Doesn't really move until we get to the middle target anyway, and that's when you're going to lock in and take the risk off the trade. And then it stabs up and hits that third target anyway. Okay, the add-on trade, that's going to get in and get out, just like in TradeStation. That's going to be a loser. Not much you can do. You avoid the short here, you get long here for a nice big move up. Another big winner, taking profit at the 3 levels if you wish. If not, no problem. You still got a big winner up here, and the stop comes off. Yeah, it's going to come off right around here. Okay, and now you've got this trade. All right, so a little different than TradeStation, but still extremely attractive and maybe even better as far as results go. All right, let's look at the next one. All right, the EuroCAD, this one's pretty easy, coming off a fairly big winner off the chart here. You can see the trailer coming up, and then no trade, a little bit of a winner here. This one I've been using the 4 position approach, and you can see here's an example of it not going the distance. Now, if you didn't take profit at the target 1, you would have just stopped out up here, and it would have been minus 128 pips times 2. Okay, but going with the 4 position approach, you get 107 pips, and then you're still going to end up losing. Well, actually, I did this wrong, because once it hits the first target, you're supposed to move your stop around the jump line, and the jump line was down here. So this is wrong, my mistake. You are able to cut your risk and come off with just a tiny little loss, and actually it closes down even further. You'd have to see if this one stopped out. You might have got stopped out here, or you might have got stopped out down in here. But you could see you did not get stopped out way up here. So it's really important. Remember, that first target, you're not necessarily locking in profit, but you do begin to trail the jump line and let that cut risk for you. So this ends up being a really good trade, and even if you didn't take profit here, you only had a tiny little loss anyway. Then you come back over here and you catch this trade. Okay, and this is great. Obviously, you're adjusting a little bit. You're going down a little further, like I said, based on the same idea. Triggers in, comes down, and you can see 93 pips, 147 pips, 198 pips, and still trailing. Also, and I pointed this out in the live trade room, when it comes down and the price hits the 200 EMA and it's close to that first target, usually at that first target, I'm going to be trailing the jump line, just like I showed you over here, except for when I'm hitting up against the 200 EMA. When I hit up against the 200 EMA like that, I automatically move down. And you can see I did that. The line's already here. I lock in. I take the risk off, because a lot of times that 200 EMA is a roadblock that is insurmountable. And that could stop the price in its tracks, and it could send it back up. So I took a little profit, locked in another pip or two, tried to stay in the trade. It worked out fine, broke through anyway, and that was a really nice trade that's still going. Quick look on MT4. Looks a little bit different. Here's that little Sunday bar you're going to ignore, and you can see what I mean by going up, down. You don't know where it got in, where it got out. You just got to ignore it, okay? This chart looks a little bit messy all through here, but it's not as bad as it appears. You had a really big winner here. You have a canceled no trade here. Is this a Sunday bar? No, that's a Tuesday bar. And that bar it triggers in, and it actually triggers in on this bar here. And it stabs down and gets the first target. Okay, this is like the example we saw in TradeStation. So you could take a profit at target 1, but the stop's moving all the way down, and you're taking, maybe break even, maybe a few pip loss. Okay, then you got this trade. Okay, so this is a pretty strange trade, but it actually triggers in, stabs up to the first target, and then takes a nosedive. And this is a case where you're probably needing to pay attention during the session. Okay, if you're only checking your charts once a day and you don't have it set to take profit here, then you're going to end up getting a full loss. But if you have some sort of a way to set alerts for yourself, like on TradeStation, I use horizontal lines and I have it send emails to my cell phone. Or, I'm usually here anyway. I'll just see it happening because I'm always glancing when I'm seeing you can see your balance moving in your account, so it kind of alerts you to take a peek at what's going on. Hopefully you're able to save that trade, because look, the jump line moves way up here, and even when it stops out, it's only supposed to be a small loss if you had moved your stop. Okay, so a good argument for checking your charts maybe more than once a day. It's rare at least, but it could happen. Okay, you have a jump off the yellow, and that one also takes a loss. Nothing you can do. Even if you were to adjust around the 50 EMA and the swing level, which I do believe you should do, you could see that it's going to get you a week later anyway. Okay, so you got to just figure some trades don't work. This trade literally cancels up here when the confirmation line crosses over the jump line. So no trade here, and then this trade here, you know, unfortunately that's another loss. So you're probably getting 2 losses in a row. You got a Sunday trade that doesn't count, and then you get this beautiful short that gets in right here. It's still going. It's already hit its 3 targets. While there's a couple losses, that's a lot of chop suey, and yet some winners inside, some well-managed trades, and only 2 losses. I mean, come on, that's nothing compared to what you're getting on the win side. Meanwhile, you also got this nice add-on here, a big bar. You may want to manage this with a little more care. Those targets are way down here, but with the EMA coming down, all this has to do is pull away. It could end up being like a gigantic, really great trade. Okay, you got to expect it's going to chop around for a bit, probably take some time to pull away from the 200 EMA. We see that on chart after chart. No big deal. The stop is up here. You just got to position size properly so that your risk is appropriate when those trades are larger like that. Meanwhile, that's an add-on as well, and you've got your confirmation line coming down, but remember, you haven't hit the first target yet. So you don't use that until you get to that first target. Okay? Then you start doing the money management as per the trade plan. Meanwhile, hopefully the stop up here on this trailer on this original trade. Now that I see this, here's the original trade. Okay, let me just double check. That was a Tuesday. So this trade actually does trigger in, and it comes up, and that one's going to stop out. Okay, so you have this one that's still going. You have this little add-on that stops out from here to here, and then this one here is still add-on 1 and still going. Okay. Okay, I want to look at the euro pound. This is a trade that one of the alternative, pairs, another one of the alternative pairs, and this is dating back to the beginning of the year, and you could just see how amazingly profitable this is. This isn't even one that I was touting all through 2012 or following, but I've added it, and I'm loving it, and I'm using the approach where I'm taking off at each target level, and you could just see immensely profitable. This has made 1,537 pips leading up to today, basically. And it's pretty straightforward. You can see it marked on the chart here. Really nice trailer. This was back on January 10th, first trade of the year. Got a nice add-on. I mean, this is huge in here. Okay, then you have a nice little small trade right here. Got a couple trades that cancel. This trade is a non-trade because it opened way up here and it stabbed up past money management. It gapped right up. No chance to grab it. When it came down, there's no way I'm putting an order in on a trade like that. It already hit money management anyway, so you don't even try to get in sync. This one, unfortunately, missed the first target by only 2 pips. So nothing you could really do on that. If you're watching it, maybe you cheat a little, but that's a full loss. And then you get this one. It's a small loss, though. Look, it's tiny compared to all these winners. And then you get this one here. It's already hit the first target for 68 pips, and the stop is already coming down, trailing the jump line. I'd keep it a little bit above the 50 EMA probably. Hopefully it won't matter. All right, so that's the euro pound. Here it is on MT4. I had to reduce it down just so that we could see very similar trades. This is that first trade that I pointed out in TradeStation. And you don't lose anything by using MT4. You get the same move. It might even be bigger because that trailer went all the way up to there, and you had a bigger trailer on the second position. Okay, so I'll make this a little bigger now. That was this trade here. Then you got this one, and this one, looks a lot different because we avoided some setups in here on TradeStation. Here you get this trade on MT4, and it actually it benefits from the gap. This is that bar that gapped, but the setup was way back here. It triggered in, and it came up and actually hit the first target, and the jump line is already up to here. So that ends up being pretty profitable as a partial profit. But you also get this one, and that one's going to stop out. Okay, that's a small loss, and we saw that on TradeStation too. All right, here on the final trades, looks very similar to TradeStation. You've got first target being reached, risk coming down following the jump line, but you also have this add-on trade here, and that one's still going. Different broker, different quotes, but decent results regardless. All right, I'm going to speed this up because there's two more examples I want to show you, and these have some really good learning. I'll save the best for last. This one here, I know it looks like a lot. There's a lot of dots on the chart, but you just have to think it through. You got to put everything into context. This is really strong support and resistance, these two EMAs, and you got the yellow coming down. It's starting to fade down and lose momentum and roll over basically. Okay, so you have to watch out and use your chart levels to try to stay in trades and don't get trapped. And what I mean by that is on this blue trade here. All right, so it's easy. You can just go back here and walk yourself through it, and you can see the profits at the different levels. This is one that I'm only, I didn't mark all three targets. I just went with the original plan on this. Trying to show you both, where you go to the third target and just trail, and you can see how the taking profit at each target's better in a lot of cases, because this is a trade. Look how it just misses the third target coming down from here down to here, just misses. And on the add-on trade, it doesn't get close to the third target. But if you're taking profit at 1 and 2 and 1 and 2, trailing the rest, you're making hundreds and hundreds of pips more than the original plan, where you just have to stop out with both positions up here. It only got 80 pips per position, and this one only got 70 pips per position. Following the confirmation line, it stopped out here. That's still not bad, 160 pips, 140 pips total, but it'd be hundreds more if you were taking profit at target 1, target 2, target 1, target 2, and trailing the rest in the same fashion. All right, it gets a little tricky here. You get the crossover. That one comes down, stabs up. Well, that's not too tricky. That's just a losing trade. You get the jump off the magenta line. That one's going to come down, come down, come down, come down. Look what happens. You get a crossover add-on, doesn't trigger in. Comes up, comes up, comes up. The stop is here, and you even push it up a little higher. The stop is here, but remember, that's at 59348. You're going to make it 5936. Then you're going to work around the next 5 or 0 that puts it at 41, and then you're going to add some spread. I mean, you might even put that all the way up to over the 50, up to there. That's how I do it. I give it room, okay? And it wouldn't have touched it anyway. What it would do, though, is try to put you long here. But that's just a trade you have to ignore. The EMA is coming down. You don't want to wiggle into a long trade. At least you adjust it up. You got a big target profile up here. You can give up a little bit. You try to stay short, and you push that entry up around the swing level, adding the extras, adding the spread, and you avoid that long trade. And in so doing, that trade comes all the way down, hits all these targets, hits the full target for 343, it's still live, trailing, and that's your primary position. Then you get this little second position short, that's your add-on. Okay, it doesn't trigger in until this bar. Looks like it's going to stab up and stop you out. But look at what you have to do here. You have to adjust that stop above the pink. Okay, so look at the numbers. You're going up to 5.8. The stop's at 5.881, and if you were to add the 5 pips, you get it up to 5.886. But that's right around where the EMA is. So I'm pushing that up to 5.891, and then I'm adding the spread. And when I get to that, I'm already getting close to this little swing level here. So basically, I'm just putting the stop at the same place as the other one. Okay, yeah, that's art to trading. You may not have done that. You may have stopped out on this trade. If that happened, so be it. You may have even stopped and reversed to long. Okay, that would have been a mistake. Okay, regardless, I want you to see this. This is a choppy market, and you have to think it through and try to stay with the prevailing trend, which is the 50 EMA below the 200, spreading lower and lower and lower. Even at the right edge of the chart, you can see it. make little chart level adjustments and try not to get caught up in the noise, because you don't want to be a ping pong ball, short, long, short, stop out, stop out, stop out. You know, you don't want to be that. Anyway, so that heads lower, and then you got the jump trade, another jump trade. If you're taking them both, fine. If you're not, fine. I know it's a lot of risk to put on. You can put on smaller risk, but I'm in those trades. And it's heading lower, and this is what I like to see. I like to see the 200 curling down, the 50 curling down and spreading away from the 200, the price accelerating down lower, the jump line, confirmation line angling down. It's a good sign that this market has much further to go, and I'm loaded. You know, my guns are loaded. Meanwhile, I've got this earlier trade right here, and it's already taken profit off, and it's trailing with a nice profit regardless. The pink trade, taking profit off, it's trailing too. And even if the jump trades come back up and lose, I'm covered because of all the profit I just made on the last couple positions. Okay? All right, MT4 traders, you could look at your chart. I think you know what to do. Just pretend these are MT4 charts because it's the exact same thing, but it's really hard to mark up MT4. The charts jump around. The tools are clumsy. All right, so this is a pretty complicated looking chart also, but there is an enormous amount of profit as long as you're thinking each setup through and following the plan and paying attention. Okay, so yeah, there were a couple losses in here, and I marked them in red. They're pretty small. This one may be a little bit larger. This one was small. That one's really small. Okay, but what I want to show you is, first of all, you've got this trade here that triggers in, and it comes down, hits the first target, and if you're trailing the jump line, which you should be, well, you can take profit there. If not, you're still stopping out right here. So while it looks like this trade's going to go all the way down, and the Pro Calculator is even tracking it, that's because I have the Pro Calculator to show stops based on the middle target, okay? Because the Pro Calculator cannot do all the maneuvers that the trade plan calls for. All right, so I have the first dot here at 1x getting hit. I don't have the Pro Calculator designed to do anything. I have the Pro Calculator showing the first target at the second target. So basically, I have two calculators on here. That's how I've got it set up. Maybe a good time to show you. I've got the Trend Jumper Standard and the Trend Jumper Pro. I think I showed you this in an earlier video. The Trend Jumper Pro, the first target's at the 1.5x, and that's where I lock in a pip of profit. Okay, but that's the second target on the chart. So I got both right on top of one another. That's why you see this stop going from here and then finally locking in here, because that's where the second target gets hit. But in reality, I'm already out of that trade. Okay, I'm going to borrow this stop with the other positions that come later and just follow those dots. All right, so it's just a matter of understanding how the tools work and then using them to help your trading. So notice I got the setup here. It says A2. This is this is an earlier setup. It never triggers in, but guess what? It never cancels either. So you got to pay attention. Instead, this one triggers in first, and it happened a few days later. This is the primary trade. Then another trade triggered in after. This is add-on number 1. Then this trade to the left triggered in finally, because the trade is still valid. The setup never canceled. So I treat this as add-on number 2, even though the setup came earlier. It triggered in after. Got it? So I'm using the trade plan, following the trailing rules based on the primary trade, based on add-on 1, then add-on 2, and then look what happens. You get another setup, add-on 3. Here's a case where there are 4 live trades. Now with add-on 3, I only go in with one position and I just get out at the full third target. That's the original trade plan. Doesn't mean you can't be more aggressive. Doesn't mean you can't come off at other targets, okay? But that's what I'm tracking. So all these trades work their way down, okay? But look what happens to add-on 2. And that one's going to stop out, okay? Actually, add-on 1 already hit its third target and you revert to the jump line. Add-on 2 doesn't revert to the jump line. it trails only the confirmation line the whole way. It's more aggressive with the stop. So that one finishes. All right? So what happens to this next trade? This becomes add-on 3 again, because add-on 3 is now your third open position, rolling add-ons. Remember the last video. So now this one becomes add-on 3, only one position. Okay, that one comes all the way down and hits for 152 pips. The primary and add-on 1 is still trailing and is still going. These earlier trades, primary and add-on, those are still going, right? This add-on 3 was only one position to begin with, and it came off for 268 pips, so that one's over. So now you've got this trade, and this becomes add-on 3 also. So now this trade is in with only a single position, while this one finished already. Okay? Now, the reason why is because this one actually, you know, you can call this add-on 2 even, because this one might have finished before this triggered in. It really depends on where you put your entry. All right? But, you know, it looks like a lot, but, you know, this is just ringing the register all the way down. You just got to think it through. All right, so good long video, some good walkthroughs. Hopefully it helps you a little bit, gives you a lot to think about. Go to the UTA spreadsheet, put the trades in, click through, one click at a time. Think through what you're going to do. Even if you don't do the UTA, set up a simple spreadsheet with entries and exits, one for longs, one for shorts, however you do it, and log your trades. It's really important to think it through and understand how to trade this strategy. Okay, there's thousands of pips in here. I mean, just look at all these, and that's not even peeling off at each target level. Okay, all right, everyone have a great Easter weekend, and I will see you next week.